Joining us now in the studio at the JSE to discuss property flipping as an investment strategy is Ricardo Teixeira, who is a managing consultant at Acsis. Morning to you, Ricardo. Your name suggests that you would have had a lot of interest going into the World Cup, but that interest is perhaps ebbing now.
It's slightly waning, you're quite right. Yeah. So I possibly may prefer to speak less about the Portuguese soccer performance and more about property.
Yeah, well, at least Portugal got there, South Africa didn't. Yeah, but let's talk about, that's the first time I've seen this term property flipping, so let's start with what it means.
Okay, it's actually, it's not a very common term in South Africa, but as the name suggests, flipping means really turning something into a profit. So when one looks at flipping property, it really implies profiting from a property ownership that you've held for a very short period of time, whereby you actually are able to buy low and sell at a higher value, but primarily aimed at like a trade where you are not holding that property for a long period of time.
So it's like buying shares on the stock exchange. They talk about value investors who want to hold for the long term, and then others who say, hey, you know, if I can get a few cents on this share price, it's going to, and I've got a lot of shares that I buy and sell, I can make money.
Correct. And I think that's a good analogy. If you look at share traders, they really are able to have, or they do have a skill in terms of identifying value. And the same would apply for a property trader or one that's going to profit from flipping property, now, where they can look at value, so where they can actually understand where the gaps in the valuation of property.
Now, as a concept, this doesn't sound like it could be new. I mean, as long as property has been sold, presumably there would be people saying, hey, if I can buy it today and sell tomorrow and get a reasonable amount, then I'll do it. Is it in fashion now? Have things changed to make it attractive? Is there technology involved?
I think what's interesting, David, we've seen that the fashion or the trend pick up in the United States, particularly pre the housing crisis in 2008. And actually, that's what led to a lot of the housing crisis, where investors were able to profit from that rapid spike in valuations of residential properties. And we've seen what's happened thereafter. The trend seems to be picking up again now globally, particularly in the USA, where there's an interest and renewed interest in buying properties and the demand for housing. And it seems to be picking up in other jurisdictions. And we come across in South Africa as well. Very often it's been criticised as being seen as a get-rich-quick scheme.
Let's give me an example. Let's say a house in Johannesburg, the typical suburb where this might happen, and how long it would take between the buying and the selling. Also, what about the bureaucracy, which you have to register things before you can sell them.
Correct, yeah. And I think that's, you mentioned bureaucracy, and that's where I'm slightly skeptical about the concept of flipping a property for a profit. Purely on the basis that, in theory, it sounds quite possible to achieve. One just needs to be able to identify a property that's below market value in a good area where there's a demand. The theory then implies take ownership, spend as little as possible refurbishing or fixing up, cleaning up the property, and then putting it back on the market at the market value in that area and profiting from that difference.
But then when is a flip, and when is it actually someone buying a house, refurbishing it, selling it down the line? What's the difference?
Exactly, and I think that's where there's a fine line between what is seen as a trade versus what is seen as an investment. So I wouldn't refer to property flipping as an investment. It's purely speculative trading, or done by someone that actually has a particular view on the property market.
So what sort of timescale are we talking about when this happens?
Internationally, the timescale is a lot shorter, purely because the time to register property, say like in the United States, is a lot quicker. Bureaucracy, as you mentioned in South Africa, not necessarily bureaucracy, but just we have a longer time frame. So the time to be able to flip a property for profit is a lot longer, and as a result, if you're not able to actually do the deal with cash, you are entering into a whole realm of other risks, in terms of interest rate risks, if you're financing the transaction, operating costs to actually own the property in that time frame, and the like. So
you at Acsis, why are you taking an interest in this? Why are we talking about this morning?
I have a particular interest in property, and over the years have developed a view on property. There's been a lot of interest in South Africa around a property scheme called flipping for property. And there was comment that I made recently on that particular scheme. And it's particularly to the questions you're asking this morning, in the fact that it is possible to achieve profits on flipping for property on properties. However, one needs to be very aware of what are you actually being exposed to. When we talk around a scheme, there's a lot of regulation that protects consumers if one is sharing the investment with others. So if you and I go into a joint investment, that would be called a scheme. Whereas if I'm owning property directly, I can control the purchase and the sale of property. So the view that I've particularly expressed in my position as Acsis is just for the public to be aware and to be cautious of when parting with their capital in a scheme.
So are there people going to other people and saying, hey, I'm going to get into this property, you give me some of your money, I'll put it in a month's time, I'll sell it, and then I'll give you some money back? And you've used the word scheme a couple of times now. Scheme has a bit of a cloud over it as a word.
Correct.
Things like Ponzi schemes and pyramid schemes. Is this one of those? Could it be one of those?
I think that's the word of caution that investors need to be aware of. Is a scheme can be very legitimate. A regulated collective investment scheme is regulated by the Financial Services Board and is perfectly legitimate for an investor to participate in. Where a scheme is unregulated, and we do see that, particularly in property, we see unregulated property syndications where private companies take ownership of property and they invite the public to participate as shareholders in this property company. That is referred to as a scheme, and yes, has negative connotations purely because of the risk profile. And I think that's the point of departure for the public, is to be aware of the risks that you take on by participating in an unregulated property scheme or investment scheme.
You also have to remember that old question of, if it's that much money that you're going to make in so short a time, what's the catch? I mean, that's the question that has to be asked, isn't it?
And you know, David, the general principle and philosophy of investing in property is that it is a get-rich-slowly investment. And when any scheme, whether it's property or others, promises quick gains, I think automatically one needs to be cautious about it. There is no such thing as get rich quick.
No, there isn't, but people keep thinking that there is.
Correct.
Thanks very much there to Ricardo Teixeira, who is management consultant at Acsis.